All right, welcome everybody. Sorry for the delay in starting this morning. A few technical issues, so I apologise for that. So we'll launch straight into things. Welcome to our latest webinar, where today we're going to have a look at an update to the JobKeeper program. So those changes were announced. Actually announced last Tuesday. We're expecting them to be announced in conjunction with the economic update last Thursday, but they were at least a couple of days earlier, so that's given us a little bit more time to get our heads around some of the proposed changes going forward, and probably would point out that they are proposed changes. Again, these changes need to go through Parliament and be legislated, and no doubt there'll be some additional consultation in the period up to the end of September, which is when these changes are proposed to come into play. So today I'm joined by Angela Hales, Nick Fitzgerald and Garry Pinch, fellow partners here at Accounting Professionals, and we're going to take a bit of a dive into firstly the changes in relation to the JobKeeper, and then also some other to sort of have a bit of a chat about some of the issues that are likely to affect businesses sort of beyond September. You know, when the tap of JobKeeper for some clients and some businesses will get turned off. So it's been a couple of months since our last webinar, and it'd be fair to say things are continuing to change. But for the most part, businesses have returned to some level of normality. Obviously, each individual industry is impacted in slightly different ways, but for the most part, businesses are now, certainly across our client base, all our businesses are continuing to, or have recommenced trading, albeit in a reduced capacity in some circumstances. We've had 3 months of the JobKeeper system, and we're certainly seeing the benefits of that program, not only across our client base, but sort of across the broader business community as a whole. And I guess everyone started to feel a little bit more comfortable getting their head around, trading in this new environment. And I say that with some level of scepticism. We all can see what's happening down in Victoria, and I think in New South Wales we're just hanging on at the moment. And if we can continue, to operate the way we are, sort of over the next 6 months, I guess, then we'd sort of consider that a win. It is disruptive and it's a little bit inconvenient, but it is far better than the alternative. So with that, I'll bring Angela Hales into the discussion. Angela heads up our tax and accounting division, and Angela's going to have a bit of a look at the proposed changes for JobKeeper. Just before we get going, I'll just point out that this is general advice in nature. It's not specific advice to your business. I think everyone probably understands that. And as we said before, the rules are complex, and they are continuously being refined. So just bear that in mind when we run through the presentation. So I'll sort of hand over to Angela now, and she can run through some of these changes that were announced last week in respect to the JobKeeper program.
Sure, thanks, Matt. So firstly, the good news is that the employers that are currently on JobKeeper, and therefore the employees currently on JobKeeper, nothing changes for the existing arrangement. There was some word that there potentially will be some changes and some businesses might have to exit. That is not the case. The initial JobKeeper arrangement is continuing to the original date, which is the 27th of September. So that means that it was an initial 6 months. Then what the government's doing now is making changes to extend JobKeeper for some businesses for an additional either 3 months or an additional 6 months. So the whole system will be in place for, at the moment, a 12-month period. But good news is that what people are used to right now, and they've budgeted for and they've planned for, is not going to change. One thing though that is going to change is it's actually going to be a lot harder to be now eligible for the next round. So it's called JobKeeper 2.0. And the government's purposely making businesses try to recover from this and to be able to, in time, not turn the tap off completely, but those who are still struggling, to still give them some support, or be it reduced support, but to be able to get them to start being able to trade and fund some of their own wages bills over the remaining 6 months. So for those businesses still struggling and have seen a decline in turnover, there is still going to be support for up to another 6 months. A lot of the eligibility is actually no different. There are a couple of things that have changed, but generally all of the initial eligibility rules about the timing of when you needed to be an employee, a long-term casual versus a short-term casual, all that kind of stuff, which was all based on this 1st of March date, none of that actually changes. So the general eligibility rules don't change. Those people who effectively were eligible initially will automatically, in some respects, be eligible from an employee perspective, automatically. It's just the turnover test that they've actually got to satisfy, which will make it harder to get in. So in that respect, that's good news. So the main changes is that when we were able to go in previously, you're able to go on projections or actuals. And this time for JobKeeper 2.0, it's only going to be on actual numbers. So there's no longer a projections or an estimate allowance now. There's going to be some practical things that you can actually do now. You're going to have a good idea whether or not you're actually going to be part of that next lot of businesses who are eligible for the next round, because the tests that are changing are all to do with turnover and what period you're testing for. So the new tests are going to be that you have a 30% fall in turnover. So this is for businesses less than $1 billion, and majority fit in that. There are different rules for businesses with turnover greater than $1 billion and for not-for-profits, but 99% businesses fall in this category. So 30% fall in turnover in June 2020 quarter compared to their June 19 quarter. So that's a real thing you can actually measure. Yeah, some people can do it now when they're doing their June BAS, or very shortly. They're going to know whether or not they've actually met the test in June. If you don't meet that test in June, then you're actually out, and you can know that ahead of time. So you're actually going to have a couple of months where you actually know, I'm no longer going to get that stimulus and need to work on things to be able to support your business without the JobKeeper. Once you again go the June, you're not in, but you've done the first step. You've actually got to wait now to the end of September 2020. And then you've got to do your BAS for the September 2020 quarter and compare that to the September 19 quarter. And again, if you're down by more than 30% in turnover for that September quarter, so therefore you've met the June 2020 quarter reduction and the September, that means you're in for the first next 3 months, which is October, November and December 2020 is when you'll get the extended 3 months. The next part after that is that to be eligible then for the final 3 months, which is January, February, March 21, then you've actually also got to then do your December quarter BAS. And this is relevant whether or not you're on a monthly BAS or a quarterly BAS. They're only testing on a quarter. So when you do the December, you compare your December 2020 quarter compared to your December 19 quarter. And if you're again down 30%, then you have met then the June, the September and the December, and then you remain eligible for the final 3 months being January, February, March 2021. There are certain things that we need to still consider. There, as Mark mentioned, it is still just preliminary legislation in the sense we know these numbers aren't going to change, but potentially the government still has to tweak some things. There's still a couple of months where they're going to refine some of the other rules that some businesses don't neatly fall in the category where they can compare their turnover to the prior 12 months. So there's still some extra information to come out from the government. We've got time now, though, to evaluate that. So when it comes out, we can assist clients to work out, did they meet the criteria for June, and then be on standby to then help them with the calculations for September also.
Sorry, Angela, I'll just jump in there for 1 second. Just to let everyone know, we've got the chat function open. So if anyone does have any questions as we go along, please feel free to just pop them in that chat section, and we'll hope to address those as we go along. So just be mindful of that. I guess really what we're talking about here is it is clearly going to be harder to get in. I guess what we've seen with clients in the past is, you know, a lot of people were able to get in I guess the first round of JobKeeper, sometimes by pure chance, just depending on what happened in the corresponding quarter or month in the previous year. Whereas now we're actually testing over a longer period, and clearly it's going to be more difficult to get in. There is just one question there, and that question is JobKeeper included in the turnover test? My understanding is that JobKeeper is not included in the test, and the reason for that is that the test is based on GST turnover, and the JobKeeper income by definition is not included in GST turnover. So the JobKeeper will be excluded from the turnover.
Yeah. So one of the main changes too is that the government have realised that when they do the numbers, they found that 1 in 4 businesses were actually, or 1 in 4 employees on JobKeeper were actually getting paid more on JobKeeper than they were pre the JobKeeper. So these were the casuals who weren't casuals or even permanent part-time that didn't earn a lot of money, were actually being paid more. So the main change, besides the eligibility with regards to turnover from the employer side of things, is actually the dollars that are actually being paid to the employees. So they're now looking at 2 tiers of payments, and also 2 tiers of payments for the 2 lots of 3-month extensions. So at the moment, you'll know that people are getting $1,500 per fortnight flat rate. It doesn't matter if you're earning more than that or less than that, it was a flat rate. So that's where a lot of people are actually getting paid more on JobKeeper. The new payments are going to be for the first initial 3 months, so October, November and December, for full-time, or sorry, not even full-time, for people who earned more than an average of worked. If they worked for more than an average of 20 hours per week for the 4 weeks leading up to the 1st of March, which effectively is February 2020, then they would get the full rate, which in that first next 3 months has gone from $1,500 down to $1,200. What then they've done is then say, well, those people who worked less than an average of 20 hours a week in that 4 weeks in the February 2020, then they get a lower rate, which we call it the partial rate, and that initially is $750. So $1,200 versus $750. When you then potentially are eligible for the following 3 months, so January, February, March 2021, those rates drop to $1,000 or the partial rate of $650. Now, the government, the Commissioner will have discretion, and there'll be some issues where there's going to be some employees who didn't work usual hours in the February for various reasons. They could have been on leave. They have acknowledged that some of those employees might have been off volunteering, fighting bushfires. So there's going to be reasons why a particular employee might fall into the partial category, but in normal circumstances, they actually should be paid the full JobKeeper. So the Commissioner does have the discretion for that. The information around that hasn't been released yet, but they just said the Commissioner will hold the discretion to look for those anomalies from an employee perspective. The other thing that the Commissioner holds the discretion for is what we call the alternate tests. So in the initial round, there's about 10 different alternate tests, and these were based on the business not falling neatly into the category of having this comparable period of trading 12 months ago. So for various reasons, there'd be businesses who actually didn't even exist in the June 19 quarter. That doesn't mean that they're automatically ineligible. And then there's other tests if that comparative quarter just isn't true to what the normal trading of the business would be. So we're yet to actually find out whether or not the Commissioner's keeping the existing alternate tests that were available initially or tweaking them. But we do know that not everybody's going to fit neatly into the box. They've given us guidelines of where we start with comparing the preceding year's quarter. And then we still need to get clarification on cash and accrual basis, because we did have some options in the first round. They're lining this, the commentary this time around is they're lining it up largely with your BAS. But that then doesn't mean that people actually, people could be on annual GST and don't actually lodge a BAS, doesn't mean that they're ineligible. So there are going to be anomalies, and they're the things that we need, that we can help you to work through to make sure that we look at every single alternate test if you don't fit neatly in the box to determine whether or not you're eligible for the next 2 rounds of the JobKeeper, because it's significantly helping businesses to stay afloat and to be able to just to trade out of it, but slowly rather than have the tap cut off.
I just cut in there, Angela, for a sec. We've got quite a few questions rolling through, so some of these coming through the chat, some through the Q&A. So either way is fine, but we will just I'll just run through them quickly. And Gary and Nick, if you want to, feel free to jump in if you want to provide some input here. But probably the first question is that do you have to be down 30% in the June quarter and the September quarter? What if you're only down in the September quarter?
It does start with the June quarter. If you're not down in the June quarter, then it doesn't matter what September holds. So it is critical that you actually have to get in on the June quarter.
And that's probably one of the discussions that we've been having around the office. I mean, what happens if we go into another lockdown period? A number of businesses that were significantly impacted by the lockdown are now able to trade again, as I mentioned earlier. So they may pass the test, but then if they're forced to go into lockdown again, under the current rules and the current JobKeeper 2.0, there's no mechanism to get back in if things deteriorate further on. So I suspect that if that happens, there'll be some other stimulus measures announced, you'd hope. But under the rules at the moment, once you're missing one of the quarters, there's no option for you to get back in.
Yeah, and it's going to be really quite critical that people's bookkeeping and accounting is really kept up to date. So one of the questions is related to businesses having to fund the cash flow in the interim to not even know whether or not they're potentially eligible. And the commentary is to say that you have to have your accounts really up to date. So for example, off the June, the JobKeeper is not changing. So just you've got plenty of time to actually work out whether or not you're eligible for the June. But when it comes to September, the September quarter, we really need the data for the September quarter as up to date as possible, so that the tick over into October means you've actually got the real September figures. We can do that eligibility calculation before you actually have to meet the first wage condition, which is to make sure that you're paying the employees the minimum amount and reporting it correctly for JobKeeper coming into October into the next, the first initial next 3 months. But you do need to know whether or not you're eligible. So it is actually critical that you actually know that you're in June, and then secondly, you know that you're in September, so that you can pay your wages properly, knowing that you're in or out, not paying that I may be in. So it's not the matter that you don't actually have to lodge your September BAS. ATO are not expecting you to actually have lodged it on time. What they're actually expecting is that you've done the numbers and that you know that when you do lodge, it'll actually mean that you are eligible. They have definitely come out and said, you do not need to lodge your September. You just have to have the actual numbers, knowing that you actually do satisfy it.
And that's, sorry to jump in there, Andrew, there's a couple of questions around that. That's going to be really important, because for those employers that are topping up wages, they'll need to pay those wages in the first fortnight in October to continue to be eligible. So I think that probably answers a couple of questions there. Certainly, businesses will need to know what their turnover is in the September quarter in the first few days of October to ensure that they can make the minimum JobKeeper payments. And the second question around that was, will the government hold off JobKeeper payments for the December quarter until they've processed the previous quarter calculations? And I think we've answered that question, as they actually won't. The JobKeeper system has always been self-assessment, so that the ATO who's administering the program will rely on individual businesses self-assessing, and they going back and doing their I guess their audit work if they feel the need to at a later point in time. Just make sure.
Just on that point, probably with most employers, their employees are going to be inquiring as to whether they're going to get their minimum JobKeeper payments, also particularly those that are on casuals. So it's probably going to be up for employers, even potentially, I would suspect a lot of employers advising their employees before the end of September as to whether they believe they're going to continue on JobKeeper or not. Even if that stage they might not necessarily know exactly, they're probably going to keep their employees informed, because you're probably not going to want to get to payday in early October and say, well, sorry, you're not getting $750, you're now not even getting $650 or $600, you're now going back to $200 a week, and that's probably not going to go down well. So for most employers, they're going to want to advise their employees as early as possible.
Yeah, and sorry, that's really important, because some clients or businesses will know now whether or not they're eligible or not, because they've missed out in June. The other question there, Angela, just there's sort of another two questions quickly, and then we'll keep going. But for the test moving forward, will you need to be more than 30% down in both quarters, or can you combine the two quarters to become 30% down?
Martin, no, you meet the 30% eligibility for June, June only, and then you're either in or out, and then you've got to meet again in September. So it's not an averaged thing. So there are practical things that employers can do now. One is work out if you're in or out based on June. That's quite critical. Once you do that, and you're still then obviously waiting for September to roll around, you then actually need to go back and look at your employees who may be eligible then, if you then satisfy the September quarter, and actually work out where they fit. So would they be the full claim or the partial claim? Because when you actually go and register or become eligible for the next round, you actually have to nominate, an employer has to nominate what they're claiming for each employee. So up front, you need to say whether or not they're a partial or a full-time. So those kind of calculations, once an employer knows that they're at least partway got one foot in the door by just meeting June, they should go back and actually work out, if I get to get into the next round, having that information readily available with the list of your employees and how you're going to claim for them, you can actually practically do all of that preparation stuff up front. So then all you're really waiting for is that confirmation of your reduction in turnover for the September quarter to get in as quick as possible.
And just one more quick question. In the past, you've been able to assess your eligibility on either a cash or an accruals basis. Is there provision for you to change the way that you're assessing, or if you went in on a cash basis initially, do you have to stay cash, or is there the flexibility to swap there?
Haven't seen it specifically written like as if it's in the rules, but the discussions have been that it's that their feeling is that it's not going to be an interchangeable type thing. So I think that's actually, unfortunately, one of the things that we need to wait and see about and get some more clarification about. But the information sessions I've sat in about have sort of raised that issue, and it was more about it's potentially not being as flexible as that without 100% confirmation, and saying that we just need to wait and see, unfortunately.
Yeah, I think the cash and accruals in the first round of JobKeeper was something that caused a lot of discussion, and I think what we probably need to keep in mind the first time round is the government needed to roll out a framework as quickly as possible, and as a result of that, there was a fair bit of wriggle room for clients. I suspect now that, given that we've got a couple of months before these JobKeeper 2 kicks in, a lot of those, I guess, grey areas on the first round will be firmed up either within the legislation or within the guidance from the ATO.
There's actually still more information to come out, even for this existing JobKeeper. So just one of the things that to be aware of is that in August 2020 and January 2021, there's actually 3 fortnights. So the JobKeeper system nominated those 2 months as the months where there's 3 fortnights. So they're actually saying that they're still going to release information for those employers that say pay monthly, or don't have a cycle that allows for, say, 3 pay periods in that period, or in those months. So there's still some little bits of information. That's not to say clearly if you pay them on average the right amount that you're going to be ineligible. They're just talking about from a reporting point of view. There's still some more information to come, and that's still in the existing system, let alone the new system.
Yeah. Okay, so just we've got on the screen there probably things that we can do straight away, and Angela has covered off on most of those things. One is, check your June 2020 GST turnover. If it has decreased by at least 30%, well then you're potentially still alive for JobKeeper 2.0. It'll then depend on what happens in this current September quarter. If you're not down by 30% in June, then you're ineligible for JobKeeper 2.0. If it's close, we always like the if it's close ones. Understand the implications, as we said before, of cash and accruals, and making sure you get your definition of GST turnover right and taxable supplies right. So as we mentioned before, if we're doing the calculation, we don't include the JobKeeper income. Probably as an extension to that, we also don't include the cash flow boost for those clients that got cash flow boost as well, that will be excluded from GST turnover. I think the point that Garry made is a very important one, in that if you know now that you're going to be out, start to communicate that message to your staff, so they've got some time to prepare. And as we said, make sure we get those September numbers as up to date as possible, because you'll have a limited window at the end of September to determine if you're eligible for the next quarter. So thanks for that update, Angela. That was really good, and I'm sure lots of questions were answered. Probably, I suspect there's a little bit of disappointment out there. The rules are a lot tighter than what they were in the first round of JobKeeper, and that's going to be really important as we sort of look at what business looks like beyond JobKeeper, and that's where I'll bring Nick into the conversation, just to have a look and have a bit of a chat about what things do we need to do to ensure, I guess, the survival of our business, or the continued success of our businesses beyond JobKeeper. So just if Nick's around, I saw him floating in before, so
Thanks,
there he is.
Thanks, Mark. Not sure what you can see.
I can see you've got clothes on, so that's a good start.
Always a good start. Yeah, look, I guess the overriding point of JobKeeper 2.0 is that it is designed to wean businesses off JobKeeper. There are a lot that are surviving solely on it at the moment, but that can't continue forever. So thankfully, I guess whilst there's going to be disappointed people out there that the eligibility criteria is a lot tougher, for quite a while, we had a level of concern that it was going to be cut before the end of September for a lot of our clients. So in that sense, I guess quite happy. But we're going to be leading into certainly that October to December period, typical run into Christmas, that could have a lot lower level of economic activity than what a lot of businesses are used to as well. So there's going to be a level of difficulty, there's going to be cash flow stress, all sorts of things that run through that period.
Yeah, I guess this came out in some of the modelling and the economic update that the Treasurer announced on Thursday, but according to the government's numbers, only 4 out of 10 businesses will continue to qualify from the 28th of September. I guess in our discussions that we've had around the office, we think that might actually be less than that number.
Yes, that's right. So 4 out of 10 will qualify, or rather 6 out of 10 won't. And I guess the government need to be a little bit careful with their numbers. They made some mistakes in their original estimates about how many businesses would qualify and the cost, but certainly what we're seeing looking across our client base, whilst the vast majority qualify for JobKeeper 1, we're probably seeing that more than 6 out of 10 we think will struggle to qualify for JobKeeper 2.0.
Yeah. And then as a result, obviously, qualifying into the September quarter is going to be difficult enough, but then the December quarter is going to be more difficult again.
Yeah, that's right. And look, it'll be really interesting to see if 6 out of 10 drop out straight away. Will there be only another 1 out of those 10 that will drop out after the December period? I think a lot of that will actually depend on where the current environment heads with what's going on in Victoria and whether that starts to affect the rest of the country.
Yeah. And I guess for the businesses that do stay in, they're going to need to deal with the fact that the subsidy payments are reducing. Because I guess what we've seen across our client base is it's probably the exception to the rule where employees have been stood down as such. JobKeeper is acting as more of a subsidy for the business owners, meaning that their employees are continuing to be paid their normal rate and working, but those wages have been subsidised through the JobKeeper system, and that subsidy is going to reduce effectively.
Yeah, that's right. It is going to reduce, and I think that's the next part that businesses need to brace for is, from a cash flow management perspective, what's that threshold that they need to work within before they need to start making some hard decisions. And unfortunately, that may crop up in the October to December period or the January to March period, especially for those that don't continue to qualify, but even for those that do.
Yeah, and I haven't seen, there hasn't been much commentary around in the last couple of days, but I guess what that means from an employee point of view is that if they're going from being stood down to now terminated, that's going to push those employees back to the job seeker payment, I guess.
Yeah, absolutely. And look, I think the government's looking to make some changes there as well. I think the benefit of JobKeeper 2.0 compared to the first round is that, as you touched on earlier, we've got so much time. Now, 2.5 months is probably not a lot of time, but it feels like a world of time in comparison to just see where the lay of the land is. And I think there's going to be certainly a lot of announcements or further announcements, depending on what happens nationally with the COVID situation. Whether that means that there's further state or federal incentives that are announced, whether that means that there's incentives that are industry-based. We really just need to wait and see, but certainly the government's been pretty clear that they're not going to just let things crumble.
Yeah, and I guess we've seen announced in the last day or so the changes to the first home buyers exemption on stamp duty in New South Wales. So up to, I think it's 800,000, up to the value of 800,000, no stamp duty for a first homeowner, and then a phase out period up to $1 million. So that doesn't directly help businesses necessarily, but I guess indirectly it keeps more of those potential homeowners into the market.
That's right, and especially with the building sector and the housing sector are such massive cornerstones of the Australian economy. It's really vital that that continues to tick along.
Yeah, and keeping in mind that is only for new builds,
yep.
For existing dwellings. So, moving on to the sort of the global side of things. Bubble seems to be a popular word at the moment, and everyone's caught up in their own little bubble. But there is events going on in the world outside of Australia, and that is going to have an impact on economic conditions as a whole.
Yeah, absolutely, it will. And look, up until now, as you said, everyone's been operating their little bubble. A lot of the focus has been on what's happening in the Australian economy with Australian businesses going into lockdown and not being able to trade and things like that. Longer term, though, we really do need to keep an eye on what's happening in the global economy, because that will flow through and affect Australian businesses. Any business that does sell overseas, any retail business that may have overseas sales in the run up to Christmas, you may be facing a flatter marketplace there. Then you turn your mind to any number of other larger industries where the export market is a massive source for the Australian economy, and probably the mining sector being a big one there. It's all bringing, I guess, dollars into the Australian economy. And as that slows up, or if that slows up, it has the ability to have a really massive impact with that trickle-down effect through the economy.
Yeah. And clearly, and we sort of mention this every time we seem to catch up on a webinar, but that's because it's really, really important, is we need to understand our numbers.
Absolutely. And look, anybody who's talked to me regularly will know this is something that I will harp on about all the time, because I believe it. And we see that our clients that really know their numbers in detail and know what their break-even points are, know how long their cash runway is going to be. They're the clients who can make smart early decisions about what they need to do so that they avoid needing to have the really uncomfortable, difficult conversations with, let's say, staff, because they've been able to make other decisions earlier that prevent it.
Yeah. And I guess, the key part of that modelling is, what does my business look like without JobKeeper, obviously.
That's right. And yes, that's right. So what does my business look like from October if I'm one of the 6 or 7 out of 10 that don't qualify? What percentage drop in revenue can my business actually sustain itself on, and for how long? And then the stress testing side of things really is about running different scenarios, forecasting. It's a very inexact science at the best of times, but understanding where those key thresholds are, again, makes a massive difference in understanding your timeframes to make important decisions.
Yeah, and I guess really, to sum up sort of the whole JobKeeper and what business looks like beyond JobKeeper, I guess from the 28th of September, for most clients, certainly at least 6 out of 10 clients, but probably more than that, their safety net's being removed. We don't have that protection of JobKeeper there anymore. So we need to make sure that we're making informed decisions in relation to the business, particularly staffing levels.
Exactly right. You think about businesses and there's a whole bunch of expenses that are there, but there's a few major levers that you can pull to improve the performance of your business. And unfortunately, staff is one of those ones. But at the same time, staff give you the greatest ability to leverage a business into growth activities in the future. So really thinking long and hard about how long you can avoid having to make those hard decisions is what helps to set your business up for the longer term as well.
Yeah, and I guess, and this is now to you, Nick, sorry, a question without notice. I like how I throw these in from time to time. But probably one thing that just occurred to me, when you spoke about levers that we can pull, staff is obviously one big one. The other big lever out there is rent. And what we saw that there were some guidelines around negotiations with tenants and landlords in respect to rent. And I don't have an answer for this, but these rental guidelines were designed to continue sort of loosely aligned with the JobKeeper period. So it'll be interesting to see how negotiations between landlords and tenants play out post September, because again, that's another area, one of those big ticket items that can impact businesses.
Yeah, exactly right, and I love those questions without notice as well. But I guess what we see through a lot of our clients who've been able to renegotiate rental arrangements is, like you said, they're negotiated to run until the end of September initially, and then they're going to need to start talking to their landlords, and probably early, about whether or not that's going to continue and what the likely outcome is. But we saw quite a bit of pushback from landlords to our client base who didn't want to accept the rent reductions or the full rent reductions. So we'd expect that after 6 months of offering it, there may be even more hesitance to continue that as well.
Yeah. I think the key thing there, that both parties really do need to act in good faith. They've got really each other's interests at heart. So, it's no good for the landlord to lose the tenant. It's also no good for the tenant not to be able to trade at all. So, for the most part, common sense has prevailed there. There's certainly some exceptions to that. But I think, that's going to be another thing that plays out in that next quarter. We might just change tack there quickly, and because there's another piece of stimulus that's still available for clients, which is the New South Wales Small Business Recovery Grant. Do you just want to run over that briefly?
Yeah, Will. Look, it's actually quite similar to the previous $10,000 state government grant that was released as far as the eligibility criteria goes. Probably the key difference, though, is obviously it's $3,000, not $10,000. But it also only requires a 30% decline in turnover compared to a 75% decline in turnover originally. It's supposed to be for highly impacted businesses, and there is a list of industries and designed for costs associated with reopening or scaling up your business from 1 July. What that means, though, and similar to the $10,000 grant, is that if your business is not in one of those highly impacted industries, you can still qualify, is our understanding, and there's a letter that's required from your accountant outlining that you do satisfy the eligibility criteria. But I guess for us, it closes on the 16th of August, so there's only about 2.5 more weeks to get those applications in. You can look back at any 2-week period from the start of March and compare it to the same 2-week period last year. But all or almost all of our clients who qualified for JobKeeper from the very start should at least be looking at whether or not they can qualify for this grant, because the JobKeeper was based on the same 30% drop in revenue.
Yep. Sorry.
No, that's all right.
All right, thanks for that update, Nick. Just we might flick to a question, and probably Angela might be the best one to answer this one. Is the question is, what do we think might happen with debt owed to the ATO? And that's probably the other sleeper that's out there at the moment. Is there is a number of clients or businesses that are accumulating debts with the ATO. Those payments have been, for the most part, pushed back to the end of September or thereabouts. Do we think that the ATO will continue to be lenient with these repayments? It's actually a good segue, because our next webinar is going to be around this sort of stuff, managing the cash flow in this environment. But I'll get Angela to jump in and just give your view on that.
Yeah. They haven't released anything formally about any an extension post 14th of September. They really were very very understanding. Really no questions asked. Very sympathetic to businesses up until now. Sorry, taxpayers in general, really. And that was particularly even with being able to vary your March and June pay-as-you-go instalments for the quarters down to nil, with no penalties or repercussions, except obviously you may need to pay the tax later. So there's been no formal extension or leniency. However, it definitely is a wait and see. We would expect them to give some kind of guidance. I mean, that's not that far away. We're talking about less than 2 months away. But they have, in some other instances, spoken about they can't not be paid forever, and that they will probably want to, they need taxpayers to pay their debts. So instead of potentially maybe another just total extension of no payment, there might be just more leniency about payment arrangements, potentially interest-free payment arrangements, potentially longer term payment arrangements, because generally they had criteria around needing to pay debts off within a certain time frame, and also keeping current debts up to date while ever you had a payment arrangement. So I think that they'd be leniency, but they probably will start to get you to pay something. And it's so unknown now whether or not we're still going to be in a position of things getting better or worse, that 2 months away is still far enough away to say that we don't really know what's going to happen yet.
Yeah. And then just another quick question, either to Angela or Nick, just in relation to the New South Wales grant, as to whether sole traders are able to access that grant.
Yeah, I actually believe they are able to access this one, including non-employing businesses.
Okay.
That was one of the things, I think, with the $10,000 grant that they were largely excluded, but it looks to me like they've been included this round.
And I just want to add one more thing for JobKeeper that I just skipped over initially, is that just to note that in this initial round, you still can enter the system all the way up to September. All the way up to September. So the initial rules around needing to meet the criteria hasn't changed. So some businesses still haven't met their reduction in turnover, so they can still be looking at July. They can still be looking at September. They still, August. They still can be looking at September. So it still hasn't ruled out those people who still could continue for the initial round, pre JobKeeper 2.0.
And Terry, just another question then in relation to the the $3,000 grant. If you are eligible for the $10,000 grant, are you eligible for the $3,000 grant?
I think so.
Are you excluded if you received it?
I don't believe there's an exclusion.
No,
I've
that's
never.
exactly right. Yeah. So if you get qualify for $10,000 grant, it's a very good chance you're going to qualify for $3,000. You've just got to continue to meet the ongoing conditions that are required under the $3,000 grant. So, but the $10,000 grant required a 75% reduction in turnover in any 2-week period. It's likely if you met that, you'll meet the 30% reduction. Certainly, if you've qualified for the $10,000 grant, it doesn't exclude you qualifying for the $3,000 grant. Okay.
And you just need to be mindful there, as we pointed out before, that the $3,000 grant is for eligible expenses, so reopening or scaling up your business, which is quite broad.
And incurred after 1st July is pretty critical too.
Yep. All right. We'll just move along. I'm just conscious of the time. We've got about 10 minutes to go. We'll just bring Garry into the conversation now, and probably to give some insight as to what businesses have been doing post JobKeeper or during JobKeeper in relation to the strategic direction and how they're coping with this new environment.
Yeah, thanks, Mark. So we're entering a new stage in sort of this recovery period, and I suppose what I've reflected with a lot of clients is that the economic pie is from the government's and the Treasury's point of view is not going to grow in the next 12 months. So where previously our growth in our businesses were probably partly supported by economic growth of 2 or 3%, the anticipation and the nature of a recession is economic growth doesn't increase. So we're working around either the same amount of economic activity or something a little bit smaller. Combined with that, what we do now have is a more active segment of the economy that's using automation and technology to grow. So there are going to be businesses that take segments of the economy away that might have been available to traditional based businesses. And that's where a focus of our advice to clients is very much around making sure that we adopt strategies that use a lot of the changing techniques, strategies and technology that's available. So I've listed out a number of those things. Certainly in this environment, it may still well be in this environment, some businesses are better to hibernate. And that's where it goes back to what Nick has said in regard to his discussion earlier, that having a clear understanding of numbers, we've definitely had businesses that have effectively remained relatively closed for an extended period of time now, because it's actually been better strategy than to open. And that might be a good strategy even going forward over the next 3 to 6 months, as long as they don't permanently lose market share, which might then cost them money to recover. Certainly businesses have adopted, a number of businesses have adopted pivot strategies. That's where they might take a segment of their business, expand that segment, or take a redirection of part of their business to a new direction, rather than providing in the form of providing new services, new products. But it's very, very clever, very, very important in regard to those strategies, particularly pivot strategy. You do your numbers first, because it's always costly to start a new segment of the business. And what we're seeing in a number of fairly highly publicised cases where businesses have pivoted, they've actually found that the market wasn't as significant as they thought it was, and there were significant costs in regard to tooling up to produce certain different goods and services, and it wasn't worth it at the end. So it's actually really quite important to have a clear understanding of your numbers if you're going to go through a pivot strategy. Certainly a focus on strategic finance analysis is really, really important. That's a lot of work we're doing with clients at the moment. So the last 3 or 4 months of JobKeeper have provided that opportunity for businesses to reassess where the opportunities exist in their marketplace. And now we've really got another 2 months where JobKeeper in some regard finances that opportunity to look at potential ways to re-enter into the business. I'll talk a little bit further about automation strategies, but that's clearly the thing that in regard to a lot of businesses need to contemplate, is looking at their business activity and looking at those activities that could be automated in some form or other. That's not only a view of reducing costs of running those segments of the business, but providing a better value proposition to their customers and the way the customer sees and communicates and works with the business. Businesses that don't have a clear online marketing strategy are going to really significantly struggle in the future. What we've seen in the early stages of is that businesses that aren't having an online presence are actually starting to lose their identity online, where without an online presence, your customers could actually be making contact or attempt to make contact online with you, and actually finding your competitors who are actually leveraging off your name, because you don't have a name in presence at the moment. And there are definitely search strategies that companies are using to leverage off other companies' names. And there's actually nothing illegal about that, as long as they're not passing off as being that company. If someone searches for your name, you don't have an online presence, and they find another business, then there's nothing illegal that businesses can do about that. So having a really strong online presence is actually not necessarily a proactive strategy now, it's a defensive strategy too. Nick's talked previously about cash war chest strategy and making sure you've got enough cash resources and using cash flow boost and JobKeeper to build those resources up. And we're certainly seeing that with a lot of businesses. Joint venture strategy, working with partners, working with stakeholders, using that network of business operations has become really quite critical moving forward in the way you do business. So your network and continue to fostering that network has become more and more critical. And all these strategies are very, very important in the light that we're looking at an economy that's not going to look at growing, looks like, and the predictions are it won't grow. So if you don't maintain a segment of the marketplace and hopefully grow it, then it's going to be a struggle to build your business and to grow the business. But the flip side of that could be you're actually losing market share to competitors. And the one thing that particularly with an online presence, automation, is the competition in the marketplace is now significantly broader from all different locations throughout Australia, but also overseas. So no longer is customers looking around the corner for products and services. They're looking online. They have been for a long time, but one thing that's come out of COVID is the preparedness for everyone to shop online has been enhanced significantly.
Just one strategy there that probably comes to mind, Gary, that is probably worthwhile having a little bit of chat about is a COVID recovery strategy. So we talk about certainly in the IT side of things, having a disaster recovery strategy. What happens if our office has a fire in it? How quickly can we continue to trade either in another location? What are we doing to back up all our data and that sort of stuff? I think what's happening and what's going to be important certainly in the next 6 to 12 months, while ever this is around, is what's the strategy for our business if one of our staff members becomes infected by COVID, or one of our customers becomes infected by COVID. So there's certainly a difference between providing a COVID safe environment, and we're seeing lots of different takes on what that means. We've got the physical distancing, we've got the sanitizing, all of that sort of stuff, working from home potentially. But I think it's time that businesses needed to turn their mind to, well, what's going to happen if one of my staff members is diagnosed with COVID, and all my other staff members who are now close contacts have to self-isolate, and what impact is that going to have on our business? And as an example for our business, we do have the ability for our staff members to work from home. So if they were required to self-isolate, then it would be disruptive, but not the end of the world if we went back to everybody working from home. But there are a number of businesses, whether it's a manufacturing business or a construction business, that if one of the people, on site or something like that gets diagnosed, it has the potential to shut the business down. So I think it's important that clients start turning their mind to that, and maybe coming up with some sort of strategy to ensure that the continued continuity of their business, if one of their staff members is diagnosed with COVID, and as a result, everyone else that's a close contact with that person needs to self-isolate. Some of the things that we've seen is having different teams, and I know that South 32, they sort of do this. They have an A and a B roster. So staff members on those two rosters don't come in contact with each other. So at least if something happens, then only half their workforce is affected. So it's certainly the time for business owners to turn their mind to how they might start to manage that.
Yeah, certainly agree. Certainly contingency planning along those lines. So extending people's contingency plans in regard to their business to provide for a COVID strategy is really, really important.
So just moving on there, I'm just conscious of the time, sorry, Gary, in relation to some of the business development strategies that you're seeing.
Yeah, Mark, we're going to see if we can flick to the next slide. So it's sort of, one thing we've seen in regard to businesses where previously, the key areas that we see that are really developing trends are around, faster delivery, irrespective of, how those services are provided. And that's happening with all businesses. People's expectation around the time it takes to deliver goods and services has certainly changed. The way that goods and services are paid for using automation, the way that businesses effectively function using all technology and automation possible, and then the combination of using, artificial intelligence in some form or other. So what we've seen more and more developing is that people's preparedness to use technologies is growing. Previously, from our point of view, the major technologies in a lot of businesses were their accounting system. What we're seeing more and more people using greater automation and technology in the way they actually do work. And then more recently, it's the combination of the doing the work, the communication of resources between employees, suppliers, customers, are using a whole stack of other software. And the more recent trend is to link all that software in together. So you see an increasing link between delivery systems and accounting systems, pay systems and accounting systems, Apple Pay and Xero. Technology is really starting to be fully integrated within businesses, And each of those integration points are improving the efficiency, and probably not only in regard to the way that costs are reduced in businesses, but importantly how customer services are provided. You know, most of the time now when customers are looking for service delivery, they're expecting technology to form a significant part of that service delivery. So the way they see a clinky manual system, it reflects on the business, it reflects on in the efficiency of their service, that business. So increasingly what we're seeing and what we anticipate to see is a continuing pace in the development of that use of technology and the integration of that technology. And to the extent that businesses that don't follow that trend or don't jump on that into those trends will find that it'll be increasingly hard to compete in the marketplace. So I'd just actively encourage people to look at the variety of technology that's available in the industry, look at how they can be integrated with their business. It's still a case of being selective in the sense that not all technology works for all businesses, and sometimes it can be a case of the shiny new object that looks fantastic but doesn't actually improve things. So just like all things that people do in small business, particularly, it's making a full assessment of the real value of the technology. But certainly it's a case of not falling behind and not putting the head in the sand as to what the opportunities might be.
Yeah, and I guess you know, some of that's reflected in the share price of a couple of those businesses. Probably Xero and Afterpay come to mind. They had some significant growth over the last 3 months in response to that. Well, thanks for that, Garry. I think that's good insight as to what I guess the bigger picture issues that clients and businesses need to consider going forward. We'll probably look at wrapping it up there. We've sort of gone for about an hour or so. I apologise that we did start a little bit late, but you know, in terms of some of the takeaways today and things that we need to be mindful of, first thing there is let's review your June quarter BAS. That's going to be the first indicator as to whether or not we're going to qualify for JobKeeper 2.0 in the first sort of instance, the first hurdle that we need to get over. As part of that, making sure that we've got our GST revenue recorded correctly. Following on for that, we need to look at having a look at what we did last year, so June, September and December last year, looking at our GST turnover amounts there, just to give us an idea of whether or not we think we might be close to being eligible moving forward. The end result of all of that, obviously, is we need at some point to reassess the JobKeeper eligibility. And that'll need to be done by the 28th of September. So as both Nick and Angela pointed out, we do have a little bit of a time up our sleeves there, which is good. The one that's a little bit more time critical is the New South Wales Small Business Recovery Grant, which closes, I think, on the 19th of August. Just a slide there. So that needs to be at the forefront of people's minds in order to access that one. As Nick pointed out, understand your business numbers and break-even points. That safety net's being taken away from us for most of clients and businesses from the 28th of September. So it is important to get a deeper understanding of those numbers. Following on from Garry's presentation, have a look at your business strategies, not only on the assumption that JobKeeper will stop, but also this new environment that we're operating in as well. Certainly the world is a vastly different place to what it was 6 months ago. So as a result, we need to adjust our strategies accordingly. As I mentioned earlier, consider a COVID-19 disaster recovery plan. I think that's important. Probably no less important as your IT disaster recovery plan and things like that. And then finally, it probably is a good time to reassess your business finance requirements. As one question that we had, a number of clients have built up debt with the ATO, and at some point that needs to be paid back. So we need to start thinking about what our finance requirements might be in relation to that. So we'll leave it there. I'd like to thank firstly Garry and Nick and Angela for their time and insight this morning. I also like to thank everyone that attended, particularly for the questions. Having questions certainly, I believe, makes the webinar much more engaging. So thank you to those that asked the questions. We'll look to be doing another webinar in the next month or so. We'll promote the details of that in the next couple of weeks. So again, thanks for everyone for attending this morning, and have a good rest of the week. Thank you.